Yeah, so it's been a really strong year for Contexa over the last 12 months. We've doubled our client base and our revenues, and also at the same time taken on 100 million of additional funding into the business, which we're using to really turbocharge our growth. And I was very excited to announce a few months ago the release of Quantexa version 2, which is the new version of the platform. Some huge game-changing features in there for our customers and our partners as well. So it's been a very interesting and exciting year. We've also probably added about 150 staff to our staff base as well. So a big year of growth for Contexa and more ahead.
So from an insurance perspective, it's been a really busy year. We've grown now into 10 different regions that we're servicing our insurance clients across, and we're serving them across multiple different use cases as well. So that's really exciting from our perspective. We focused on the value expansion within our existing client base to make sure they're getting maximum value from our technology and from our platform. But there's been two other key initiatives we've focused on. One is bringing in more subject matter experts from the industry, understanding different experiences across the value chain, including both operational experience, regulatory experience, as well as business and data analytics experience. And then the other aspect to where we've been focusing our time and energy is on growing our partner ecosystem. We've now, proud to say, we've got some really key strategic partnerships within the cloud provider space, developing technology marketplace partnerships with the leading cloud capabilities. We've also grown into the delivery and consulting partners as well, so helping the likes of the Big Four and the major consulting firms develop their client transformation programs with our technology. So some really exciting initiatives that's happening in the market. Yes, it's been a busy year within insurance this year. We've seen a lot of continued market consolidation. We've seen a number of continued mergers and acquisitions that have happened in the industry, and we've seen an evolving perception of product consolidation and product diversification as well. So it's been a really interesting transformation that the industry's taken on whilst going through, a global crisis, right, with the world of COVID and the transformation that businesses have had to take in that route. And what that's really led to, in my perspective, is bringing the customer to the heart, understanding who that customer is, how do you offer them the right service, how do you offer them the right product, and how do you use a more data-led approach to that servicing of that customer. And I think we'll see that trend continue, both in product diversification, but also in customer engagement and understanding how do you use more data insights as part of the customer journey to give them a better experience throughout the process.
Yeah, so first of all, the insurance industry right now, at least here in the United States, feels that the past year and a half dealing with COVID has really put them on their back foot a little bit on what they want to do and what they're trying to do. So I think this year they've really tried to get back the control that they have had in the past, and in doing so, using new tools, new understanding of customer needs, finding new ways to offer innovative products, because the landscape has changed so much in the past year. Now, what that means is the data that they do have, they must use that data better in new and innovative ways. The digital world is here in the insurance industry, and we've got insurance companies popping up everywhere. The traditional brick and mortar type insurance company has to adopt new technologies. They have to look at external data sources. They have to use the technology and the data they have in better ways. For many, many years with the insurance industry was, how can I get my hands on more data? And it's not so much that anymore. It's using the data you have in better ways. Now, as far as the insurance fraud schemes go, it's still organized criminal activity that the insurance companies want to identify and really help eliminate. Now, this can be anywhere from healthcare fraud, medical billing fraud, staged auto accidents, pharmacy schemes, telehealth, obviously with COVID, and with everything working from home, new ways of providing medical services. There's a lot of fraud in that space as well. But I also don't want to forget about property and casualty type fraud schemes. This is huge problems here in the United States after national disasters, that contractors come in and scam victims that were just hurt by a hurricane or hurt by tornadoes. Waste removal, water remediation, billing repair scams, billing for services that were never rendered. Those types of things are still at the forefront of the U.S. carriers' minds.
Okay, so I think within the insurance market, we've seen a hard market this year. There's been a number of changes and challenges. So we've got the FCA pricing changes January next year, the increase of transition risk, and with that, I think insurers have really actually taken to focusing on their risk selection and their pricing. And actually, there's been a realization that there is a large amount of external data available to insurers to use within the underwriting process. Now, I think there is a challenge moving forwards. How do we actually use that data? How do we create the relationships? How do we actually make it meaningful? And that's certainly some of the discussions that we've been having. And then once you've got that, you can then surface it into something like an underwriting workbench. And I think we're going to see quite a few of them coming into the market in the future.
So with regard to technology within the insurance market, we're seeing a general trend, which is obviously moving in the direction of things like cloud. A lot of more organizations moving all their data into the cloud, generally in sort of their tenant of the cloud, if that makes sense, a private cloud. But I guess what we're seeing sort of from a fraud detection and technology perspective is people moving away from what we would typically have seen, which is point solutions. And those point solutions are where you buy something that just solves one business problem, perhaps claims fraud or helping you with underwriting. And what we're seeing is a move towards more enterprise tooling, which really allows you to tackle more than one problem and gives you context across all of your data. So, there's been a huge increase in the amount of data that insurers have available to them. And actually extracting meaningful intelligence out of that data has become a really critical priority. And if you can do so and benefit multiple use cases, both everything from sort of fraud detection right through to underwriting and pricing, that's something that we're seeing gain real traction within the market. We're also seeing a lot of adoption of data science and things like CDOs, chief data officers, etc., who essentially are trying to centralize data and analytics and make it available for the entire enterprise. So these are the trends that we're seeing, and ultimately, from our perspective, the critical thing is to be able to get value, get meaningful insights out of that data. And that's where I suppose Contexa comes in to provide context across all of that data.
In terms of what we like to see for trends going into 2021, I think that the concept of risk is changing quite drastically. Risk is much more than just the likelihood to claim and the likelihood of a loss event. And it comes back to the fact that insurance now is about insuring the customer, not necessarily insuring the object or the event. It's not about, when you have a travel insurance policy, insuring the likelihood of a plane delay, but it's about understanding the likelihood that that customer will be traveling. It's about understanding where will they be traveling. It's about understanding what types of flights will they be on and what type of travel will they engage in, because that ultimately starts to justify the risk that you're holding around that customer coverage and that customer portfolio. And so being more customer centric, having more customer centric and data led initiatives to understanding how you treat that customer is going to be increasingly important. And I think the second piece is a renewed focus on operating or loss ratios. It's about understanding how technology solutions can help improve core operating ratios, especially when the external market is so hard at the moment and when the COVID pandemic is still ongoing. Understanding how those technology solutions will help insurers be more proactive with risk mitigation. So that's looking at risk prevention and loss reduction rather than just looking at the claim occurring and reactive responses to that claim. And it's about looking at expenses. It's about understanding efficiencies and how do you speed up customer servicing, because ultimately if you speed up the way that you interact with the customer, the faster you can make decisions with the customer, you clearly improve your expense ratio, but you also include the likelihood likelihood of that customer churning, which is obviously a large part of an insurer's profitability ratio as well. So there's going to be a real big focus and renewed focus on how do insurers manage that underpinning of profitability and manage the operational overhead that is sustained as part of that.
Yes, I think in 2022 and even moving forward, you have several converging factors that are coming into play with the P&C market and homeowners insurance. Now, there's a few things that are out of the control of the insurance company. Now, what COVID variant is coming around the corner, we don't know. It's out of their control. What new risks are related to that? The insurance companies are going to have to take that into account. And there are other factors too, like climate change, catastrophe losses, environmental risks that insurance industry now all has to take into account on a more broad scale. Now there are new technologies that are going to assist the insurance industry to deal with things like autonomous vehicles, telehealth, telemedicine, vehicle safety features when you're insuring a vehicle. Those types of things are coming into play. Now, the regulatory environment is a bit unknown, at least here in the United States, because we have huge consumer data privacy issues that the regulators are grappling with, the industry is grappling with, and what comes out of that, what new regulations and what new legislation comes out of that is to be seen. And we'll see a lot of that as early as next month. Within a couple of weeks, the state legislatures will be back in session and they will be addressing those issues as best they can. Now, what about some things that the insurance companies have full control over? What are the things that they can do now is how they utilize the data that they have access to, the data sets, internal, external, that type of thing. How they deploy artificial intelligence, machine learning, softwares is really going to determine who wins and loses within the industry. Some new advances that have been used over the last few years, things like telematics, geospatial intelligence, really lead these companies to have low touch or no touch claims handling processes, those types of things. And again, the companies that utilize that technology better than the others, in my opinion, I think will come out on the winning side.
So looking forward to 2022, I think that there's going to be a really key focus on customer experience and hyper-personalization. So how can insurers use the data that they've got available to them to understand their customer more? Whether that be how and when to market to them, when they're developing their products, or when looking at the actual customer experience when using digital channels. So I think that there will be a significant investment from the insurance industry into digital channels this year. How can we use data to effectively streamline that? So can we fill in data points that normally a customer would have to fill in themselves? It's all about making that quicker and faster and more efficient for them, because I think that's going to be the key focus.
Yeah, so I guess over a number of years, we've seen the move towards things like data lakes and having all your data in one place. I feel that a lot of these projects have ended up with what we might call a data swamp, where basically all the data is in one place, but actually you can't extract real intelligence from it. So what you actually need to be able to do is break down these silos, these data silos that executives often find they have within their data estate, and bring it together into something that is unified and fundamentally usable for business and analytical decision making. So that, I think, is a really key thing to focus on. The other second aspect of this is a kind of something we're seeing in the industry at the moment, which is a key question for executives, which is build versus buy. And there's a real sort of, as people invest in more and more data scientists and technical teams, there's a tendency to build more in-house versus buying it. And there are real good reasons to doing things like in-house builds. But what we're tending to find is there's a sensible trade-off where there are commodity pieces of technology, things which are just available off the shelf that can accelerate your time to value. So a really simple one, the example we were just talking about, how do you break down those silos? Well, the answer is you need to bring data together. You need to be able to understand when a Jamie Hutton is in multiple data sources. And that is a problem that fundamentally companies like Quantexa have solved. Solved, I mean. And ultimately, that is something that probably is not worth building from scratch yourself. What you probably want to be focused on is the more analytical business decision making. That's the thing that differentiates you from the other carriers that you're going head to head against. And the commodity stuff that's available off the shelf is the stuff that I guess you want to buy to accelerate your time to value.
The companies must enrich the customer journey throughout the life cycle of the insurance journey, from point of sale all the way through the claims handling process. The small to mid-size insurers are going to struggle with the accuracy of the data, the volume of the data that they have. So they have to come in and employ these tools to help them compete in the market. What the industry will do is either the large companies will get larger, or the smaller insurance companies will get smarter. There's Alex mentioned in the beginning consolidation. We expect we see more consolidation within the industry, but we also will see these smaller to mid-sized companies actually compete with the big, large companies because they're going to deploy new types of technology.
I think so. Coming out of the COVID-19 pandemic, and I hope we do eventually come out of it, I think there will be a focus on a sustainable recovery. I think it's already started. With insurers placing ESG at the top of their agendas. Now, I'm not talking about virtue signaling or greenwashing financial accounts here. I'm talking about real change. We've already seen some front runners in terms of embedding ESG within the operating model of insurers. So, for example, Zurich. And we've also seen that actually insurers have realized that it's not just their own practices that need to be ESG compliant, it is also their book of business and their portfolio of investments. So for example, we've seen Beazley open up their ESG syndicate, and Aviva with the divestment away from organizations who profit from coal. Now, using ESG data within the underwriting process is going to be key here. And I think that insurers will soon realize that actually it's not just good for obviously things like diversity, inclusion, sustainability in the environment, but actually it helps them with their financial strength. So we already know that ESG organizations are good for the loss ratio. They're less likely to get sued, less likely to get embroiled in scandals, and they have in place things like good health and safety practices, so they're less likely to claim. So they're good for business as well.
So one thing we haven't talked about so much is in terms of the insurers gaining back control, and what I mean by that is sort of control of their estate and their destiny and the data that underpins that and the technology decisions that they make. Jamie touched upon the fact that insurers are going down cloud transformation routes, they're going down data warehousing routes and data lake routes, but ultimately what insurers really want to do is start to maintain more control around the way that they make decisions, and that's about controlling the analytical process that underpins those decisions. It's about controlling where customer data sits and how they ensure that customer sensitive data is maintained in a highly secure manner. It's about control and transparency around the way that those decisions get flowed into operational workflows or operational processes. So really the way that insurers are looking at technology and data-based investments are all around that maintenance of control, having that technology at the heart of their business and not necessarily outsourcing every part of the decision value chain to another organization, because ultimately what we've seen is that leads to a lack of transparency around the customer decision, and it ultimately often leads to a reduction in quality of the decision at the end of it. So I think that's an area of focus as well for the insurance market.